everybody. Welcome to the Stock Market Morning Prep video for Friday, June the 6th. Well, the markets had a melt-up basically yesterday after the ECB, the head of ECB, Draghi, had stated that they were going to initiate negative interest rates for banks that held money at the central bank. Now, that's all well and good because Draghi is known not really to do much of anything other than talk down or up, for that matter, their currency, which would be the euro. However, so he comes out and states that, oh, we're going to be doing this negative interest rate to banks that leave their money, which is all well and good. However, 32 billion euros is really not a lot of money, so it really has no impact at all. So the the equity markets, actually rallied. In the beginning, sold off, and then started to rally on that news. Now, I think the currency markets have it right. Eurodollar actually rallied on that news when it actually sold off in the beginning. So there's really no impact at all. However, it's not what we think, right? It's what the markets do and react to price action. And the markets melted up again yesterday, making new all-time highs yet again. This is 12 days straight up in a row. So we have to be, obviously, as traders, cautious about what's going on around us because nothing makes sense anymore. Markets are, a lot of stocks are just making one little move and then going into a base pattern pretty much most of the day. For the last 12 trading days anyway, that is. So we need to be cautious, and we are cautious. That doesn't mean we short the market. If you wanted to short the market as a hedge, absolutely. If you have a lot of longs on your book, I definitely recommend doing so. Options are very, very cheap with the VIX down at 11 and change. I would definitely do so because at any given moment, we are going to have a market turnaround. And I'm telling you, mark my words, I wish we knew when because we don't. We don't know when. This market could go to 1960, which is really the next triple extension. We are now above two major extensions, the 1272, the 1618, and now we're going to the 200 extension, round lot number 2, and then we'll go to the 2618, which would be 1960. So we're at 1941 right now in the ES. We have another 20 points. Look, we really have done so. We've done that yesterday, which we were up about almost 13, 14 handles. Another 20 points really doesn't matter because obviously market participants really don't care that the markets are extremely overextended, and the algorithms have just gone wild. If you looked at price action in some of the charts that I would show you, and for instance, one of them would be like a Facebook, right? You take a look at Facebook on a 5-minute chart, you would see market sold off, and if you really look in it, you dive into it, and this is where the perfect buy entry would be taking out this little consolidation area. You would see on price action, the algorithms literally just started taking up, and then once it made new highs and didn't have any offers, right? We couldn't find, when the algorithms can't find any offers, what happens? They revert back and they start selling everything. And sure enough, the market, Facebook in this instance, has sold off. And on no news, okay, while equity markets were rallying into new highs going into the close. So this is what I'm saying, that it's dangerous out there. If you don't know what you're doing, or if you're new to the game, take a step back and just watch the price action. You would really be amazed, and you would learn a lot by looking at price action, just like a Facebook. But my point is that this is what you look for, because if you look at the daily chart, right? You look at this basing pattern. Look for stocks that have based. That is going to be your number one thing. You don't want to buy stocks like a Netflix that have gone up 100 points in the last 12 trading days. Would you do this? Absolutely. I wouldn't touch this with a 10-foot pole. Even if it went up another 20, 30 points, the risk is to the downside. There's no question about it. So I would not be looking for that. But look for stocks that, like we were talking about the solars, that are basing here at this range. Now that I would take a trade like this if I found the perfect entry. Okay, something like that, a TWTR, which would be Twitter. Stocks that have based like this that really have gotten decimated already and now looking for a breakout. Now remember, this is all counter trend, so you need to know how to trade counter trend. If you don't, then take a step back. Okay, but this is what I'm doing here, because the indexes are moving, and a lot of stocks that do move They make their move the first hour, and then the rest of the day is basically shot. You're just looking at price action, and you're looking at the index that just basically melt up like we did yesterday. Now, we did have a little bit better volume, okay, above average for the last 12 trading days. But again, you have to be cautious. Would you want to buy the spiders at 194.65? Absolutely not. I wouldn't even think about buying spiders at one. I would actually be looking to get a short entry off if we had a price reversed, and I would do so. Remember, too, by the way, just an FYI, we have non-farm payrolls that come out this morning at 8:30 Eastern time. So be careful, okay? If you have an opportunity to lighten your book, I would do so before that. And if not, let's wait till the non-farm payrolls come out. I would suspect, okay, that the non-farm payrolls will be a good number for the markets. Why? Because the markets are highly manipulated. If you have the ISM that came out the other day, that the government changed their numbers twice in one morning, they say, oh no, this is right. This is the real right one. I mean, it's actually comical. So you have to understand, and I would suspect that the government's going to do whatever it takes to keep this market elevated. So they're going to put out a good report, and it is what it is. Unfortunately, I wish we had a little more of a true market, but we don't. We have a manipulated market here, and that's what we're dealt with. So this is what we have to deal with trading. Okay, so I'm going to run through the indexes real quick. I'm not going to show this. Really, nothing has changed. You just have to use caution. We're at these highs. I do think that the markets will actually close higher by year end. The weekly chart looks great. Daily chart, wouldn't touch it at all. I wouldn't touch these spiders at all. Diamonds made new highs, break out again, as you can see, on better volume. But the last 12 trading days have been dismal. Lack of volume, lack of conviction. And also, by the way, as of yesterday, not only did most of consumer staples, utilities, and healthcare continue to rally, also bonds rallied and the yen rallied. So the currency markets have it right. And equities yet have to come down to reality. Transportation actually took back the last two trading days and is right now at its highs. As you can see here, the 20-day moving average was so far away from the 8, and then the 34, and then the 50, which is on dismal volume. We did have this volume spike, which I thought that was capitulation. Obviously, when you have a slow grind higher, no volume, the path of least resistance is up, so we are still climbing up higher, and I would not doubt it if we made new highs today. I really would not doubt it at all. IWM, I did mention that we do have a bull flag here. A couple days ago, we had better than expected volume. Now, to be quite honest, and I mentioned this the other day, I would buy the IWM on a breakout. I would have bought this on a breakout. But remember, when the markets are really not doing much on no volume, you just have to be cautious here, and if you want to, take a few trades and you're willing to get stopped out, that's fine. I like to gauge the risk reward on my entries and say, well, you know what, I have a decent entry here, I'm going to look to take it. But as you can see, IWM, decent trade, big day up, and we did have this break to this bearish trend. As you can see here, we had a break back out, and then we have that bull flag, and we broke back higher again. So I'll do some Fibonacci work over the weekend and put some targets on IWM as well as the other indices. Q's back up again. As you can see, this is really heavily weighted in Apple, so Apple would be the real star of this index as well. But I just want to show you one more thing, which is the euro dollar. And this is why I mentioned yesterday the currency markets have it right. If you look at, this is this morning, but if you look at yesterday's price action, the euro dollar actually broke down, based on Draghi's comments and what he did with the negative interest rates, charging banks to be parking their money in the central bank. However, when they really digested everything and realized, look what happened to the euro. The euro actually rallied, and that is not what Draghi wanted. So now the euro is rallying. Now we are down a little bit this morning, but I do think the currency markets have it right. And it's very hard to manipulate any currency. We have a $5 trillion market. Now, yes, the central banks and the Bank of Japan, so to speak, give you an example. Yes, they can talk down their currency, and the markets will move in that direction, at least for a short term. But then after a while, it's very hard to keep that currency, whether it be down or up. That just giving a quick example. But let's see what happens. Let's see if they really realize that what he did really doesn't make any sense, or does really make no impact. That's the better word on what's happening here. Okay. All right, guys. Have a great weekend. Be careful today. 8:30 non-farm payroll numbers come out, and then let's really see what happens going into next week. I'm really excited about next week because you know what? When the markets are up this high, somebody's going to have to hit the trigger at one point in time. Remember, I am not a bull or a bear. I'm just looking at price action telling me, hey, I'm using caution here because I am not looking to get caught when the markets do start to roll over. Remember, when you have thin volume, yeah, the moves are exaggerated like we have now to the upside. But remember the downside. Downside, there's much faster and quicker moves, and really wipes out. One day can wipe out all 12 days. So just be careful. That's all I'm saying. Have a great weekend, everybody. We'll talk to you on Monday.